Good morning. You've tuned into ET now, and this is Market Fatafat with me, Karunya Rao. Let's bring on board my colleagues from the research desk who are joining us on the show right now are Pranay Jain as well as Varun. We also have Ashish Kayal to talk about the technicals of the stocks that we're focusing in trade today. Let's first begin with stock number one, and that is ICICI Bank, one of the top performers as far as the heavyweight benchmark index is concerned. In fact, Morgan Stanley has conducted their analyst meet, and this has been the first time in over a decade that they've conducted an analyst meet, and Morgan Stanley has come out with a note post that maintaining their overweight stance, the target that they've given is 775 rupees a share. They say use of technology to drive sustained strong earnings as well as ROE. Pricing power for big banks is also clearly back according to Morgan Stanley, and they believe that there is scope for meaningful re-rating of the stock over the next 12 to 18 months, and that's why they've given it a thumbs up and a very, very solid target of 775 rupees a share. Let's move right on to stock number two, which is also a bank, but this one is from the PSU universe. Ashish, how are you reading into the technicals for Canara Bank?
Hi, good morning to you and the viewers. We have seen some bounce back from the lower levels in Canara Bank, and that there is a possibility we might start seeing some positive attempts from here on. So one can create long positions on Canara Bank, keeping a stop loss of 215 and expecting a target of around 233 on the upside.
All right, that's the word coming in on Canara Bank. It's a buy rating from Ashish. Let's talk about some stocks from the ancillary space, Bharat Forge as well as Ramkrishna Forgings, which are trading weak today. Pranay, how bad were the Class 8 numbers? Okay, Bharat Forge has clearly staged a recovery, but it still continues to be muted.
Yes, Karuna, the November 8 Class 8 truck orders from US show that the readings continue to remain weak. 17,300 odd units was the number that came in for November. Now that's a 36% decline year on year and 21% month on month. But despite that, you're seeing not just Bharat Forge, but many other auto companies seeing buying and accumulation from the lows of the morning, and perhaps it seems that a lot of the weakness is getting priced in.
All right, that's Bharat Forge for you, trading completely flat as we speak. Let's talk about Eris Life Sciences as well. The stock is up about 1.5%. Varun, what acquisition has taken place for the company? Can you tell us more details about it?
Yeah, sure, Karanya. Well, it's not really a typical acquisition which we see. There's no assets being traded hands over here. There's no unit being bought over. There's no IP, but there is a trademark. Now, Eris will acquire a trademark for Zemelis from Novartis. This will give Eris the right to market any drugs under the Zemelis brand name going forward. The cost of this hasn't been that high. It's around 93 crores. So just under 100 crores, and the revenue potential is currently also somewhere around there, less than 100 crores, but this can grow considerably in the coming future. So a slight positive trigger for Eris today, up 1.5%, and that's the update there.
All right, moving on back once again to the financial space, we would like to bring your focus back to L&T Finance Holdings. That one is also trading with some amount of gains at this juncture. Citi has come out with a rather optimistic note on the company. They've maintained a buy rating. The target that they've given is 1855 rupees per share. Right now, the stock is trading at 1655, so definitely a 200 rupees upside is what they're looking at. They say opening a 90 days is positive catalyst watch. They expect strong Q3 as well from L&T Infotech. The company continues to execute well versus other mid-cap peers, and they also see consistent large deal wins probability as well. This is L&T Infotech. I stand corrected, not L&T Finance, and that's the stock that we're tracking in trade at this juncture. Moving on to stock number 5, Ashish, another name from the PSB universe. It's Union Bank. Can you tell us whether or not the up move can be sustained?
Yes, absolutely. Union Bank also saw some correction from the levels of around 66. It came down to 57 odd levels, and now we are seeing some bounce back on an intra-day basis. So there is a possibility that short-term up move can be seen here, and we can expect it to move towards the levels of around 53.50. So long positions can be created in Union Bank. One can maintain a stop loss of 58.40 and for the target of 63.50.
auto क्यों में B? Even a Union Bank gets a thumbs up from Ashish. Moving on to stock number 7, Sequence Scientific. Pranay, can you tell us why are we tracking this today?
Well, news reports are indicating, Karunya, that the founders, Arun Kumar and also Ravi Shankar, they are looking to sell controlling stake in the company. They've appointed merchant bankers, and JP Morgan for them is looking out buyers over here. But the thing is, the promoters are expecting a strong controlling stake premium, which could be as close to 40 or 50%, and therefore that would take some time for any deal to consummate over here. The management is targeting to get it done by the end of this fiscal. It's one of the largest animal care companies in the country, and hopefully they will find a lot of interested bidders. But how long it takes for the deal to consummate, we'll wait and watch.
That's Sequence Scientific for you. Right now, definitely trading a tad bit muted in trade, but it's up 0.3 odd percent. Moving away from Fatafat for a minute, let's quickly pull up the Rise with India small case index as well to see how it's trading. The markets definitely have seen a decent recovery from the day's lowest point, but continues to trade listed for the benchmark. Small case index is actually underperforming the benchmarks as well. Right now, it's about 0.4% lower in trade at 570.1. Let's talk about the big debut on the bourses today. It's CSB Bank, and in fact, the stock jumped 41% over the issue price to list at 275 rupees earlier on in the trading session. Retail individual investors had bid 44 times their quota size, and if you look at the overall subscription, it saw very, very stellar response as well. It was oversubscribed 87 times its issue size. Let's also get in an interaction that my colleague had with the management of CSB earlier on in the day, right from the listing event. Listen in.
We are overwhelmed by the response. We never expected the issue to oversubscribe so much considering the capital market situation today. But fortunately for us, the market also touched the peak on the day of closing. So that also helped. The sentiments were in favor of the banks, and people believed in the story which we described about the future. The past track record is not great. We had a loss-making years for the past 3-4 years. Probably people have believed in the strategy which we have implemented for the turnaround and what you have achieved during the last 2 years and the possibility for the growth in the future.
So you yourself said that 2017 to 19 there was a loss. Now that you've come out of it, what is the outlook going forward as far as the profits of the company is concerned? And when you say that investors have probably believed in the turnaround strategy, take us through what the turnaround strategy really is looking like.
Actually, our net interest margin, which was only 1.7%, has come to 3.4% today. Our cost of deposit has gone down from 7.8 to 5.90. Our yield on advances has consistently improved to 10.60 today. So looking at all these things, the profitability should be sustained, barring unforeseen circumstances. And most of the NPAs and potential NPAs are already identified and provided for. Provision coverage ratio is more than 80%. That gives confidence for us to predict that the future could be better.
Sure. So as far as your NPAs is concerned, the numbers come down a little bit from the last couple of years. But what is the outlook going forward? Do you think this is something that you can maintain? And even as if you talk about the slippages in the company, what are the sectors that these slippages are coming in from?
No, there are no further slippages happening on the corporate portfolio, and SME portfolio is also under control. We have seen some increase in the retail portfolio of late, particularly on the loans against properties. And even in the housing loans, some slippages have happened in the interim period. But that's a very small portfolio. I think we will be in a position to control it, and our desire is to maintain NPS at the same level.
Sure. The last time we spoke, you said that as far as the SME sector goes, you've identified certain sectors that you will not be supporting. About 7 you mentioned. What are these sectors, and what is the reason behind not extending loans to them?
Cashew processing is one area where there is a large dependence on the labor, and labor is a problem in Kerala always. And again, on the import also. The exchange fluctuation also takes away the profits in the cashew segment, and most of the accounts have become NPA in the past. So cashew is one segment which we exited. And then next one is on the gold jewellery manufacturing, which is a main business in Kerala. We exited the business completely because we are not comfortable about the accounting systems. And third is on the resorts and hotels also. After the flood, we are very selective on lending against resorts and particularly those having bar licenses. And the fourth one is on the steel processing is one area where we exited already.
Okay. So as far as the revenue mix is concerned, 33% of advances are towards a gold loan, sir. Going forward, how do you see this mix changing, and do you think you will continue to depend as much on gold?
Now, as of now, it is 33%. It was growing at almost 24% compound annual growth, whereas advance is growing only at 16% compound annual growth. So the proportion of gold loan in the overall portfolio is keep on increasing. Board has fixed a limit of 35% earlier. We have to go back to the board and discuss whether we can increase the portfolio, because investors and analysts are more comfortable with the gold loan portfolio. We will take a call on that in the next board meeting.
Okay. And so you also said that you would like to maintain, keep corporate loans to 15 to 20%. What would be the reason behind it not expanding in that particular area?
No specific reason. Our skill sets are limited in the corporate banking portfolio. So we do not have much of, and our size is very small. If I participate in a consortium, I'm an insignificant player. We don't want to participate in the consortiums, and we would like to keep this portfolio below 15% only going forward. Now it is 25%.
So as far as expansion goes, what is the kind of number of branches that you're looking to open, and which areas, as of now, South and Maharashtra are your biggest markets?
We will continue to expand in the south and the west markets, and in a limited way in the north market. There is no specific number attached to it. It all depends upon the opportunities coming up.
Sure. Just lastly, now that the company is listed, what is the long-term vision for the bank, sir? What is the kind of market share that you're expecting? What is your game plan to in terms of growing?
Looking at the response and the price which is going on, I'm tempted to come back to the market at the earliest with a great growth story. Right?
Any plans to raise any more capital?
No, as of now there is nothing.
Okay.
But if the market is so supportive, market is so expecting from the bank, whether we can expand the business much faster and grab the opportunity is one thing which we are thinking of today.
Welcome back. You're still watching Market Fatafat on ET now. Time to get on board with the remaining stocks on our radar. Next up is HDFC AMC. But unlike many other mid-cap names, this one has also staged a decent recovery intraday, but still down about 1.5%. Why is that?
So that's because there's some supply overhang coming into the counter. Standard Life is looking to exit their stake of around 2.2 to 2.5%. So just today the OFS has been open and it should close by end of day or tomorrow. So you're looking at around 1,650 crores, because 2.5% of a 73,000 crore market cap that's coming up for sale. It should be eaten up pretty quickly, looking at how HDFC has performed, and obviously it's an HDFC company, but some downward pressure anticipated today on the back of this OFS.
All right, that's HDFC AMC for you, down a good 48 basis points right now. Let's talk about Sun TV as well. Ashish, how are the technicals looking like for this one? In the last couple of months, it has been able to put out a decent recovery, but the question is that sustainable, the kind of recovery and rebound that they've shown?
Yes, absolutely. We are now seeing some retracement towards 61.8% on Sun TV from the higher level. Nevertheless, it formed a very important low around the zone of 455, and there is a possibility that we might protect that zone and continue to again move higher. So long positions can be created here, but with a strict stop loss of 455, and then we can expect a target of 493 on the upside.
All right, a buy call coming in on Sun TV. Meantime, it's an important day for Bharti Airtel. They have a board meet today to discuss fundraising. Pranay, tell us what the street is expecting.
Karunya, the street is expecting that the company should be raising anywhere close to about $3 billion, which should be a mix of equity and other modes. Now, this is largely coming after a very successful rights issue that they had done, and it was a large one earlier this year. But this is coming on the back of, the AGR dues and other issues that they were slapped with because of regulations. So these funds need to be raised primarily for that. It will be very important to see what is the size of the fundraising and the mode that they do later on in the day.
That's Airtel for you. Trading completely flat at this juncture ahead of that important board meet. It's in focus. Moving on to stock number 11. Varun, Capacity Infra. Can you tell us why the stock is in focus?
Yeah, sure, Karanya. So there was basically a pledge created yesterday within the company. The CFO has created a pledge on around 50 lakh shares. So you're looking at 7.37% of the total equity of the counter being pledged. Now, perhaps this has something to do with the recent, stall in Mumbai projects where Capacity has a high percentage of their overall order book coming in from this area, and there's some funding constraints. So in order to guarantee a line of credit from the bank, this pledge had to be created. So it's not entirely positive, I'd say, for Capacity.
All right, the stock is also reacting in the same way, not very positive, down 0.5% right now. Future Consumer and others. Okay, before we talk about some individual stocks on Fatafat, here's my colleague Ruchi Bhatia joining us about cabinet clearing Bharat Bond ETF. Ruchi, what exactly are you picking up? What are the details?
So the Bharat Bond ETF essentially is a debt ETF which the cabinet has given a go-ahead for. We're given to understand that the Department of Investment and Public Asset Management had even conducted the road shows last month for the Bharat Bond ETF. More than a dozen PSUs will be a part of the Bharat Bond ETF. The idea behind this, of course, is to enhance the depth in the corporate bond market, as well as attract retail investors to various debt products. We're given to understand that the Department of Investment and Public Asset Management will be rolling out the Bharat Bond ETF in mid-December. They have received interest by various global players as well to invest in the debt markets for India. The ETF will have bonds of various public sector units as an underlying asset. So this is going to be an important product in a bid to deepen the corporate bond market. We should try to get some analysts to speak on the relevance and the importance of a product like this. This, of course, is going to be a massive shot in the arm for deepening the corporate bond market. And having said that, it is an important product that the government of India is looking to come out with.
Absolutely. A big step taken by the government of India to deepen the bond market. Ruchi, thank you so much for joining us with the latest on that front. Unfortunately, that's all the stocks we can cover on Market Fatafat in this edition, but we'll be back at 1:30. Stay tuned to ET now till then.